Call to order the special meeting of the Board of Education. Today is Wednesday, October 30th, 2024. Please rise for the pledge.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We need an approval of the revised agenda. Is there a motion?
Motion.
Second?
Second.
All in favor?
Aye.
Aye. Motion passes. Approval of the minutes. Is there a motion?
Motion.
Second?
Second.
All in favor?
Aye.
Motion carries. And next up is the presentation of the, I think it should, 2023-2024 External Audit Report.
Thank you. Good afternoon. My name is Scott Oling. I'm a partner with PKF O'Connor Davies and was in charge of overseeing the audit that we conducted for the school district for the year that ended June 30th, 24. So I see that everybody has a copy of the report. It's also been provided in PDF form to Patrick for you to post. So I know members of the board went over this in detail with one of my other partners last week, Alan Cassay, went over how the numbers ended up for the year. So I'm just going to go through it at a high level and hopefully explain to you, well, how you did this year. So we've issued what's known as a clean opinion or an unmodified opinion on the district's finances. That's the highest form of assurance that an auditor can provide a client. It basically says that we believe these financials fairly presented what happened in the district financially for the year ended June 30th. So I'm going to take you to the general fund, which is your primary fund. That's the fund the voters vote upon each year for your operations. And the income statement, revenue and expense statement for that fund appears on page 56 of the audit report. The numbers that are on page 56 are then in further detail beginning on pages 57 through 62, if you wanted to see a deeper dive on these numbers as well. So if we look at page 56, it's presented in a budget to actual format as required by New York State. The first column is the original budget that the voters voted upon back in the spring of 23. And then the final budget includes changes that Patrick would have come to the board asking you to make amendments throughout the year to the budget. So if we look at the top of the page, those are the revenues that support your operations. And as you could see, you estimated approximately $212 million to run the school district. The majority of that coming from the levy of property taxes. And the property tax number plus the part of the number in the next line that's called other tax items. Within tax items include STAR payments for folks who qualify for the credit on their property tax bill. So your total property tax levy was approximately $129 million, including STAR this year. That was the same levy as the prior year. The allocation between the levy and STAR switches because of the changes in the STAR program that the state made a couple of years ago. But you took in $129 million. And then your other big revenue item, of course, is the state aid, your foundation aid and building aid, transportation aid, all those kinds of things. So the good news for the district this year is that you took in $87 million in state aid. So compared to your original budget estimate of about $81.5 million, you did about $6 million better than you expected in state aid. You also did very well on the line called use of money and property, which is interest earnings. Interest rates up until recently were the highest they've been in, I think, a decade or two. And you took in, about $4.7 million because you have fund balance, so you have savings accounts that are earning interest. You have that money invested in FDIC insured items, and that number was up about $1.8 million from the previous year. So the interest rates were higher. Of course, the Federal Reserve interest rates first time last month or this month that they're meeting. Going to probably cut it a couple more times. So most likely we've reached a peak in this, and we'll probably go back down. But between the state aid and the interest earnings, you could see compared to budget, you did about $12 million better than you anticipated. You took in $12 million more in revenue than your plan, a total of $225 million. Then in the middle of the page is what you spent that money on. The first group of spending is what we call general support, which are more the buildings and grounds and administrative costs of the district. Those came in about $24 million this year, as you could say, mostly in central services, which is buildings and grounds. The second category, the second subtotal, are the instructional costs. So these are really like the classroom-related costs, teachers, guidance counselors, principals, all the costs for the district. Those costs came in approximately $108 million this year. That was up about $3 million compared to the previous year, generally to do with contractual salary increases, step increases for the teachers. Transportation costs, and we've seen this at most districts this year, were up compared to the previous year. This year, you spent $18.2 million. Last year, about $16.8 million. And then employee benefits, the benefits you provide legally or contractually, pension, health, FICA, workers' comp, all those kinds of things. This year, those were up about $3.6 million. They came in at $51.7 million compared to about $48 million last year, with the biggest increase, of course, being in health insurance costs. So overall, you spent, as you can see on the total expenditure line in the actual column, you spent $207.6 million this year. There were purchase orders that are carrying over to next year of $2.5 million, mostly in buildings and grounds. You do a lot of work over the summer to get the schools ready for the year. And so you could see in the variance column on the total expenditure line, you underspent your revised budget by about $5.2 million, which is about 2.5% of the overall budget. So generally what we see at most school districts, a 2-3% savings on the budget. The big thing this year was on the line towards the bottom that says other financing uses. These are the movement of monies from the general fund to other funds, and in your case, primarily the capital projects fund, as you embark primarily on the $98 million capital project. There was, $7 million moved from the general fund to provide operating monies towards the cost of that overall project, which will ultimately reduce the amount you bond on those projects. So the good news really for the district is when you look in the first column at the bottom, you actually anticipated using $2.8 million more than you were going to take in. That's why there's a negative number there, and that was plugged through the use of fund balance through your savings account. Most of that were the encumbrances, the purchase orders that rolled from the prior year, about $2.6 million of that. The other was $250,000 that you gave back in property tax relief in balancing this budget. But you could then see in the final budget column, the expected use of fund balance grew from $2.8 million to now expecting to have to dip into fund balance by $11.8 million. So an increase of about $8.9 million. That was primarily driven by two things. Patrick would have come to you. You had to pay a big tax certiorari claim this year of about $1.4 million. He came to you to amend the budget to take money out of your tax certiorari reserve to pay that certiorari. And then about $7.4 million was moved, appropriated, and moved to the capital projects fund towards the project. So the plan in the second column, if everything came in on plan, revenues came in as you planned, expenditures came in as planned, your fund balance would have declined $11.8 million. But because of revenues coming in better than you expected and you spending less than you expected, not only did you not deplete fund balance by 11.8, but you actually added $8.3 million fund balance. That's after sending $1 million over to the capital fund. So really good stuff this year. That $8.3 million surplus gets added to the opening fund balance of $51 almost 52 million, and you ended the year with total fund balance of $60 million in your general fund. That then is further broken down on page 46. In the notes, there's a chart that shows you the breakdown of this fund balance. The first column is the general fund that totals that $60 million figure. So if we start at the top of that column, 3.7 million of that 60 million is set aside for what we call prepaid expenditures. You generally have to pay certain bills in cash by June 30th, but they really are for the next fiscal year. So because the cash is gone, even though it's not an expense for this year, fund balance gets set aside so that you don't spend that again. But the majority of your fund balance, of the 60 million, about 3/4 of it is in restricted fund balance components, as you can see, of about $45 million. Restricted fund balance are restrictions under general municipal law or education law, but none of these can exist without board action. So you do it under the umbrella of the law, the various laws from New York. So within this section of fund balance, 1.5 million set aside for workers' compensation claims. So if you get hit with some unexpected claims, you'd be able to draw from this. This one just had some interest earnings, from the previous year added to it. You also have money, again, for a small amount for unemployment benefits, pretty similar to last year, just some interest earnings. Your tax certiorari reserve had about 5.6 million a year ago. As I just mentioned, you used 1.4 million of it to pay a certiorari claim, and then some interest earnings was added to the balance, and that's how you end this year with 4.4 in your cert reserve. Then you have two reserves relating to the employees' retirement system and the teachers' retirement system. Both of these, in addition to interest earnings on the previous year's balances, Patrick had come to you to get resolutions, and you added $700,000 to each of these reserves so that it's available in the future should the retirement systems, raise rates substantially, charge you a lot more. You won't have to go to the taxpayers again for that to cover maybe those kinds of increases. You created a new reserve this year for property loss and liability, so $725,000 of the surplus we talked about went to this, and this generally covers deductibles and things that insurance would not cover. The employee benefit reserve is just vacation, sick time that is owed employees upon their departure from the district. Again, besides interest earnings being added to the balance that was in there last year of about $5.5 million, Patrick came to you and asked you to put an additional $700,000 from this year's surplus funds in there. And then your future capital projects reserve started the year with just under $18 million in it that you had accumulated in previous years. We added about $900,000 in interest that was earned on that $18 million. And then again, towards the end of the year, Patrick went to you and asked you to approve taking $4 million of this year's surplus and putting it into that capital reserve, which is obviously going to be used as you go forward with the big project for the district. So now you end this year with approximately $22.3 million in that capital reserve. So the capital reserve really is about half of the restricted fund balance. So 45 million of your 60 million is spoken for and can only be, used through board action going forward. Then the 2.5 million of purchases on order, the encumbrances, most of that is in the buildings and grounds area, as I said, and probably most of this money's already been spent by this point in this year. Then you gave back in property tax relief $1 million this year. When you adopted or you asked the voters to approve your 24-25 budget, you presented them a budget where your expected revenues were going to be $1 million less than your projected expenditures for this year. And you said, well, we have fund balance, we'll balance that plan using fund balance. So really what you're left with out of $60 million of fund balance is unassigned fund balance of about $7.9 million. That represents about 3.5% of your 24, 25 budget. You're allowed to have 4% in there, so you're about $1 million under where you'd be allowed to be. But obviously, certain decisions, policy decisions were made to put some additional money into the reserve accounts that we just went through. And, so you are below, what you're allowed to have in there, which is okay. It's still a very healthy number. And then obviously, depending on how things go this year, we'll see where the numbers end up this year. So that's really all I had on the general fund. I thought maybe that would be a good stopping point to see if anybody had any comments or questions. That was a lot of stuff in a short period of time.
Thank you very much, Scott. I think that was great. And, as he said, we had a very good year last year. I think the things that are notable was the contribution to the capital reserve. We had talked about that. That was something when we had modeled our big $98 million project. We had said all along that we would be able to put down $24 million for the project, and then borrow the rest. So the $7 million transfer to the capital fund ensures that we can do that. We have additional money in our reserve, both for that project and future projects. We had talked about potentially doing a little bit more and looking for authorization in May of this year for some of the work in 3 of the elementary schools. So that's going to enable us to do that. So, it was a good year, and certainly a lot of these funds are going to go a long way towards the capital needs that we have in the future.
Scott, for the benefit of people, the hundreds of people watching at home, the state aid, right? I think it just helps them to understand it came in so much higher than we budgeted for. I know why that's the case, but can you just explain it so that a layman could understand it? Or Patrick?
Yeah.
Yeah, why don't I take that one, Michael? So it really was a couple of things, primarily transportation aid. So transportation aid is an expense-based aid. So in other words, I like to say we spend $1 this year and we receive approximately 70 cents next year in aid. So it's a lagging kind of aid that's looking backwards. What has happened over the last few years is we've seen some big increases in our transportation expenses, largely driven by some of the non-public transportation. And it was almost as though when you look back, the transportation aid was catching up, if you will, with the expenses. So we had a couple of years where we went over budget. We expended more than we had budgeted in the area of transportation.
Then we get more the following year.
Then we get more the following year. So there was almost like a lag in this. And I looked back at this to say, boy, this was, we really were off on this one. But that state aid projection during that time, I looked back, there's the governor's projection, which is around January, and then the final, which is, around late March, if you will. The budgetary projection was about 10 million, and that's what we put in the budget. What actually turned out to be, the aid was much higher, and this was 1 year. It's sort of like the same thing happened again, where we had a projection, we used that, and we can adjust those, and we do sometimes. Sometimes we adjust downwards if we feel like the number is wrong or it's just off their estimate. And a lot of these estimates actually for transportation aid and some of the other aids are based on what we put in. So in other words, at the end of the summer, we're putting in the results of the prior fiscal year, right? And that's what will be our aid going forward. But we're also projecting for the upcoming year. And that's when you budget what the budgetary numbers are based on. So there's a few points in that process where you're estimating, really.
Well, the budget's an estimate to begin with.
It always is an estimate. It's a financial plan, typically for a year and what you want to do. So I feel like going forward, we're not going to have those same sort of surprises in transportation expenses. We've adjusted the transportation budget accordingly. And I think we have a better handle, and we've sort of leveled off to some degree in those transportation expenses.
Good.
I mean, the other big one that Scott mentioned was the interest earnings.
Yes.
So it sort of was a bit of an anomaly. I bet you a lot of districts were off. You want to be careful on that one because who knows? Yeah, that's right, it is.
I do have a question. I think the public, because the extra classroom activity fund, that's a qualified opinion, which is not an ideal opinion, but we know why.
Yes.
So, at least on the audit committee. So I thought you could just cover that for a minute for the whole group.
Sure. And just so you know, you're not alone in this. So we do a qualified opinion on all of our school district extra classroom reports. And it basically is because no way for us as auditors, because unlike the business office, even though they're dealing with, a $200 million operation, they're not really dealing with cash. They're getting everything wired, and so there's not tons of cash involved in the general fund that we speak of. With the extra classroom activities, most likely the majority of it is cash. And so we as auditors, all we know is what was deposited. That some club did whatever they did, and they deposited $100. There's no way for us to know whether they really collected $200, $300, $1,000, and just put $100 in. So because of that, that's why we qualify that opinion.
Yes.
That's basically the answer, and we do that on all our school districts.
Is that why you have the sentence in the one paragraph, accordingly, we were unable to form an opinion with respect to the completeness of cash receipts?
Correct.
That's basically what that's for.
Correct.
But as a district, Patrick has that information, or the district has that information based on the clubs that are formed.
Well, they have it, but just to answer that, because we talked about it in the audit committee, they have when the deposit's made, but they don't know when the cash was collected, and there are rules that it needs to be deposited.
We generally like within 3
24 to
business
40,
days, 72,
three
yeah.
business days. So it's hard for them to track because Patrick's area won't know. Someone could have been sitting with that in an envelope for a week before they deposited it. It's because they're collecting cash, it's very hard to get a good handle on it, is what we were told.
Right.
So,
But there's records on that end. So if I'm the advisor of that club and I'm collecting $100, at the end of the week, I know that I have $100 that I collected for X amount. So there should be records on that end, whether or not at what point it hits the bank and Patrick sees that part, there should be records that are being kept.
okay.
I'm asking.
Well, I think there should be, right? And that
Okay.
goes to internal controls, that we would have in any operation, especially the cash-heavy operation of the, extra classroom accounts. So we do have controls, we do ask them to do certain things. We've been having discussions about this, and I think we're going to do more, if you will, and engage the administrators at the buildings more to do these things, to have better records, to plan their budgets better. We've been talking a lot about the fund balances that we've been seeing in the extra classroom account. So we're gonna ramp that up. And, part of that is reinforcing the need for the internal controls, the training for the advisors if they haven't had it, all those sorts of things go hand in hand.
So the answer to that then, as where we sit now, is kind of no. Is that what you're saying?
Well,
That
is the
we don't
question-
have a detailed explanation as to the monies that are coming and going within?
I think the answer would be they do have an explanation. There should be, if they're collecting money, a control might be 2 people there collecting it. They're issuing receipts, like at the gate, so to speak, so if I have this number of receipts, dual receipts left, that I should have this much money in the cash box. So these are all things that are internal controls that we would use in these types of events and for extra classroom, and we're doing it. I think in this instance, one of the issues, correct me if I'm wrong, Scott, was the amount of time that elapsed between when the money was collected and when it was deposited in the bank. That was one of the
That's
findings.
the second, yeah, that's the other thing, right.
Long in between? Is that what the concern was?
Well, that's part of it. That's not what this qualification is about. The qualification is about, if you have 2 people at a club collecting $100 and they issue a receipt to somebody for $100, that's fine. But if they did something together where they got $200 and the other person said, I don't need a receipt or whatever. So they may just take that. So they'll report that they got the 100 because they issued a receipt for that 100, but we don't know if there was another $100 that came in.
So I think to some degree, Scott, what you're saying is that just by the nature of cash, it's inherently risky
Correct.
and problematic. And we try to counter that, try to do this with all things, with controls, internal controls, right? Segregation of duties, having multiple people involved in a transaction. Now, what Scott just alluded to would be a collusion situation.
Right.
Yeah.
Which is
Right.
almost impossible to
Yeah.
overcome.
And just remember, we're talking, I used $100, but obviously a lot of these things are $1, $2, $5, we're talking. But overall, the receipts that have been recorded are, $438,000 for the year between all the clubs, the middle school, high school. So that's a lot of little cash transactions that there's no way for us to know, hey, was there another $10,000 collected, $5,000, that did not, this is what got deposited. But there's no way for us to know the whole universe of it.
But the way to deal with that is with the internal controls, a good internal control system. And what I'm saying, Stacy, is we're going to ramp up. We've done a lot. 5, 6 years ago, we had really, brought everything up to another level with the training for the advisors, with the discussions, with the tools and the materials. We're going to sort of reinvigorate that, and because we've been having discussions about it, and now we have a finding. So we're going to pursue that more heavily than we have been.
And the other thing we talk about is the extra classroom activity funds, the management of it, besides the adult advisors, that do it, this is also supposed to be for the students to be involved
Right.
with the accounting and the
Correct,
boring,
which is
the
why there
boring
should be
side.
detailed records and be overseen by the advisors. So, we should already have those systems in place from previous audits that we had learned about.
We do have systems in place.
So I don't think that they're saying, by the nature of what the auditor is saying, that there's no records as to what is being collected. Just by the nature of a collection of cash, there's always a
A risk.
possibility that a dollar dropped under the table, or someone may have collected it and not written it down. Not that they don't keep records or there's not an intent for honesty, it's just always there's a
Correct.
risk. So they, as auditors, can't say definitively in this report that all of the cash has been
Was
accounted
accounted
for, and
for.
I think
Correct.
that's what it
There's-
is.
What
Yeah.
Patrick just shared was that it's going to be enhanced further,
Correct.
more protocols around it, right?
Right.
And we generally don't make that same kind of comment on the disbursement side, because obviously most of the disbursements are done, through checks. So that, there's obviously a record of.
Okay.
Okay, thank you.
Thank you.
Thanks, Scott.
We have a resolution to accept the external audit report for the fiscal year ending June 30th, 2024. Is there
I motion.
Second.
all in favor?
Aye.
Motion carries. Next up is the approval of the New York State School Board Association Area Director. We had previously nominated John Williams at our September 11, 2024. Is there a motion?
Motion.
Second?
Second.
All in favor?
Aye.
Motion carries. The next item is the approval of the revised Board of Ed meeting calendar. I think there was a change, Karen,
November 19th to the
specifically.
20th.
November 19th was changed to November 20th. Is there a motion?
Motion.
Second? Yes?
It said motion, she said second.
All in favor?
Aye.
Motion carries. And adjournment into executive session for the purpose of discussing personnel. Can I get a motion?
Motion.
Motion.
Second?
Second.
All in favor?
Aye.
Aye.
Okay, meeting adjourned.